Hello, welcome to TRDR.tv. My name is Robert Sievers. Today we're here with a special guest, Bob Desmond. He is the CEO of the contrarian.tv. How are you doing today, Bob?
I'm doing great today, Robert. Thank you for having me.
Excellent. Well, I'm glad that you could join us today. So let's go ahead and let's get started with the interview. Can you tell me a little bit about yourself, kind of just where you first became interested in the stock markets, kind of when that was, and basically just how you got that first initial foot in the door?
Yeah, I always had an interest in, believe it or not, history. So history took me into politics, and I realized back in the mid to late '80s that there was a correlation between politics and the financial markets. So that's when I began to become interested in, okay, how can I make a living in the financial markets? And I first went into mortgages, selling mortgages,
Okay.
insurance, and eventually I found my passion in trading the markets.
Okay. So when was that? When did you first start doing some actual trades?
In the early 1990s, my first stock was 75 shares of LoJack through
Okay.
my Charles Schwab brokerage account at that point in time. I was synthetic. I did well on that trade, and from that point in time, I was addicted to the markets. But during that time, I wasn't familiar with technical analysis, so the type of trading I do now is not aligned to what I was doing at that point in time. Back then, it was more a gut instinct of what a stock would do,
Yeah.
intuition. Now more, I'm more fact-based, a rules-based approach to trading the markets.
Well, that's good. I'm glad to hear that you made that progression, and as opposed to maybe going the opposite way, starting with the technical and now just going for the gut. So no, it seems like a kind of a common thing among a lot of traders.
Absolutely.
I know that I kind of did the same thing. My first stock I think was like a Blizzard, which is a video game company. It's something that interests me. And so I think a lot of people kind of make that same kind of gut reaction, and then once
Yep.
you make those first couple of dollars, after that it's kind of you need to start finding a more legitimate way to actually be able to support your newfound love, basically. So
Yeah, absolutely, absolutely.
all right, so let's go on. Go on ahead to the next question. What did you do? I mean, I know we talked a little bit about kind of what you did as selling some mortgages and stuff. But before you started the contrariantrader.com, did you do anything else that was financially based, or were you in any other sort of education based
Yeah,
businesses, or?
for the most part, in the 1990s, when I really became involved with the markets, we was mostly momentum based. You rarely shorted because that wasn't really where the market. You were money bought. It was a fairly easy market to trade because all it did was move higher.
Okay.
I did do some put writing to bring in income.
Okay.
I continue to do that today, but I was very heavy into it back at that point in time. As a matter of fact, my primary income at that point in time through put writing was selling puts on PMC Sierra in 1999 and into 2000. So I was more of a momentum trader.
Okay.
I knew the direction of the market. It was nowhere near a contrarian based approach, but that's how I traded the market at that point in time. And that really all changed after the dot-com bust.
Okay.
And that's when I had to reevaluate the new reality, which was that the markets would no longer move higher, and then I had to adapt to a new environment where you needed to become more of a trader. And it's at that point in time where I really dedicated myself to watching the charts, learning the charts, looking for trends, and developing my own strategy of how I could profit consistently in the market. And I think that's what most people have a problem doing is adapting to a consistent method, and that's what I was able to achieve.
Of course, yeah. I mean, you can make a little bit of profit in a growth market, as long as you buy the right stocks. But once you start seeing that, yeah, you're gonna have those moments where you're gonna have the market corrections, and it's difficult, of course, to profit off of those if you're only investing and not doing as much of the shorting, from what I understand. But
Correct. Correct.
Let's talk a little bit about the strategy that you implement now at the contrariantrader.com.
Okay.
Can you explain just a little bit about kind of the basic strategy of how you implement that?
Yeah. What I like to do first, if I could,
Of course.
Robert, is dispel what it's not.
Okay.
And a lot of people have a different definition of what contrarian means. And generally, the knee-jerk reaction is that you bet against the market constantly, whether it be to the upside or to the downside. And that's not actually true in my case. For some, it may be, but in my case, it's a matter of uh, I look for unsustainability of a market. The trend could still be higher, but I look for weaknesses, divergences in the market that signal that, you know what, this market may either A, be topping out, or B, be bottoming out where we had been previously in a downtrend.
Okay.
So I still believe at my core that the trend is definitely your friend for your core positions. But when you're looking to make those macro bets, meaning I believe in short-term trading, swing trading, and I
Okay.
also believe in position trading, a longer view on the markets. And while I may be bullish short-term, I'll also be building positions in the opposite direction to take advantage of a downturn,
Okay.
as I'm doing right now.
Interesting. All right. So yeah, I think I have a basis. So you definitely do like a couple different levels of trading, like you were saying. You know, there's some trading on the short term, watching the short term trends and how they're going, but also in the long term as well. And it's very important to kind of set those things up, similar to almost what happened in this year, the beginning of 2016. You know, like
And I think you're 1,000% right on that point. It's a perfect case in point where we went into uh, December of 15 with the Santa Claus rally. As we traditionally see, we see that bull market run. But what the charts would show you, what were you looking at, not just the intraday charts, which a lot of new investors have a tendency to do because they move rapidly, uh, not even the daily charts. I'm looking literally at the quarterly charts and down to the weekly charts, identifying where we are historically. Now, case in point, back in December, if you took a trend line using a quarterly chart, you would see that we were at the upper band of a rising uptrend channel.
okay,
Now, the only two times that we had hit it prior were back in 2000 and in 2007. We all know what happened after that. We had steep declines.
yeah,
So the probability of a sell-off early in the year was very, very likely. And when you took a look at the breadth of the market, for folks out there that aren't familiar, what that means is the number of stocks that are helping move higher along with the markets. They were dropping off. All you had were the triple Q names, your Amazons, your Googles. They were moving higher and they were dragging the market with it. While you saw the Russell 2000, which I was short of, rolling over, making lower highs since July of 2015.
okay, interesting. And then so obviously, since you do kind of a couple of different types of trades, one of my next questions was how long is a typical trade for you? I mean, I know that you said you did some on the short term, some on the long term. You do a little bit of intraday, a little bit of swing trading. But do some of your trades actually end up being long term holds that you're trading as well, or is it typically mostly short term?
Yeah, it's I will have longer term positions put on. Like right now, I'm long of potash, have been long of it for a while.
Okay.
Uranium, I started buying uranium back in July of 2015. I still own that. I bought more early in the year as I saw commodities break out. Uh, NUGT, Nugget, which is the Direxion leveraged ETF on the
Yeah.
gold mining names. I've been in and out of that one several times this year. That's up 277% so far this year.
Yeah, that's been a busy one this year.
It has been. It's been a great winner, and I plan on holding that longer because I do believe that the commodity names will continue higher. So to answer your question on my position trades, it could be several weeks to several months.
Okay.
With swing trading, it could be several days to a couple of weeks. Rarely do I day trade. I have to be honest. The key to being a successful trader is knowing what you're good at and what you're not good at. I am not a good day trader. I'm
Okay.
more of end of day analyst. I like to, after the markets close, do my analysis, I'd like to call my the contrarian trader a service for people with day jobs, if that makes sense.
It
You
definitely
work
does.
during the day, you check out my analysis after hours at night.
No, it definitely does. I mean, because obviously for those of you who haven't necessarily tried day trading, it's not something that you can do while you're at work. It's something that, if you accidentally miss your exit point or your entry point, like it's not going to be a happy day for you. The end of the day is going to be rough, and so I totally understand. And I'm actually in the same kind of boat as you. I prefer to do a little bit longer term trades because my ability to analyze the stocks that quickly is just not as effective as it is on a longer term. It gives me a little bit more time to really kind of sit back, look at where I think the markets are going to go, and kind of actually analyze it. So I think along the same kind of lines as you.
Yeah, and
What are the next questions that I had? What I saw a little bit on your YouTube that you have a video that kind of talks a little bit about analysts and their upgrades and their downgrades. Can you explain a little bit about what you talk about in that video?
yeah, what what I was, and I freely admit where at times in life I had been naive, and that was in the 1990s, and that was when the market was going straight up. So you could afford to be naive. After the 2000 bust, you could no longer afford to be naive. You needed to appreciate what drove the market. And I did a lot of hindsight review of what I did, what the markets did, who was going to jail. You had Bernie Ebbers, CEO of WorldCom. He was on TV every other day. He was a god. You had the CEO of Enron. He went to jail. He was on CNBC every other day.
Yeah.
So I began to question the system, the media, and the financial markets, and not the markets per se, but the banks. And what were their motivations for coming out and giving upgrades and downgrades? I had to ask myself that question. Case in point, Goldman Sachs, earlier this year in January, came out and they upgraded gold. And it was good to see that they were in alignment with my thinking. And I thought that was, wow, pretty good that Goldman was coming out with this upgrade. But then only a month later, they reversed and said not to just hold gold, they said to short gold.
Okay.
And the question, as a new investor to the market, or even one that's been interested in the market for some time, is one, you have to ask yourself the question, why are they giving me free advice if I don't have an account with Goldman Sachs? And people need to appreciate the fact that the vast majority of the income that the banks derive nowadays are from trading.
Yeah.
So their ad spend on financial news media helps to get their word out, and if that can help move their positions, so be it for them. And I think that they will take advantage of that very, very good position they have in the market. Now, this is my own opinion, and believe me, sometimes I get hate mail from some banks because of what I say, but I believe in straight talk. And I all too many times see that I'll take a look at the chart of gold in case in point. It's breaking out of a long-term downtrend. And I have to question, why are you downgrading it here? You should be saying buy it. They were right in January. What happened between January and February? I have no idea. Apparently their buy side wasn't talking to their sell side, and they had to reverse course. And I'm still waiting for Jeff Curry, who's out there. He's the analyst that said short gold, to come out and say cover because gold has gone against them. So I'm waiting for Goldman to come out any day now. I would hope that they would do this and say cover that short position, but they never will.
It's funny. I mean, the way I kind of see it is that basically, unless you're doing day trading, where you're trading gap up, gap down, that sort of thing, most of the time when you're following these upgrades or downgrades, it's almost the same thing as kind of chasing a stock. I mean, at that point, all of the intelligent money is already into the stock, and they're just kind of waiting for the rest of the people to follow suit. And then as soon as they see that, as soon as they get that little bump that they were looking for, that extra 20, 30 cents or $1, obviously depending on the original share price, they're pulling out their shares, they're pulling out their positions. And so,
Absolutely.
I mean, this is, I've heard this from a couple different people, and so it seems to be something that people are slowly starting to realize. But at the same time, I know I watch every day, and you still see people following and chasing these stocks that that get recent upgrades and recent downgrades. So
Yeah, and it's all about the banks getting into what I like to call getting into traders' heads, and it's all about psychology and emotion, and that's what they prey upon. The last thing that they want you doing is looking at charts, learning the charts, and that's what I teach. I believe it's my new religion when it comes down to my secondary religion, I should say. That's blasphemy.
it's okay on Trader TV, a little
Okay, that makes
some
sense.
financial blasphemy is okay.
Okay. Uh, but the last thing they want you to do is have your own opinion based and formulated upon sound and rational technical analysis, reviewing how the money flow is, where's the money going. Case in point, right now, we're seeing the markets move higher into the week, but unlike in December, you're not seeing the triple Qs outperform anymore. In fact, they began to lag. They're breaking down. So I'm shorting the triple Qs. What are we long of? And that's outperforming the market. Exactly what I said going into 2016 would outperform. Energy, commodity plays, not necessarily industrial metals, but precious metals. But now even industrial metals are outperforming. Alcoa came out with disappointing numbers. They're up on the year now.
Interesting. No, I've been kind of watching. I mean, is it partially because you think some of them are almost like safe haven commodities as well, similar to gold and silver? Like it's just something that people can invest in and kind of actually physically hold, or is there some other basic strategy behind it?
Yeah, I think that's an excellent question, and here's the earlier I mentioned that there's always a macro trade. I always have that longer term position trade that I'm putting on. And what we need to, if I can ask myself a question really quick, is
of course,
what is my thesis? What do I believe? And what I believe is that we have a potential dollar crisis on our hand. We have the central banks around the globe controlling monetary policy.
Yeah.
We have no fiscal reforms whatsoever here in the United States. You have artificial manipulation of interest rates staying down.
Yeah.
And at some point in time, the markets are going to reject the current policy. And what you're seeing now are people saying, okay, it's over for the triple Q names, the Amazons of the world. What people want to do is they want to buy something tangible. And they're buying precious metals, they are buying crude oil. So the reason why they want to own those assets is because at some point in time, inflation is going to rear its ugly head.
Yeah.
And you have traders now that are positioning for that upward move in inflation, because when it finally hits, and I would argue that it's here, the governments just won't admit it now.
Yeah,
because they want negative interest rates. They need to keep, especially here in the States, we're in a presidential election year.
Yeah.
They need to get people inspired about the market, so they'll vote the next Democratic president in. That Janet Yellen, our Fed chairman, she wants to keep her job. So it's all about keeping the markets in check. So the day that they lose control of inflation, which is beginning to happen now, you have manufacturing here in the States already in a recession. They don't want to talk about that. You have raw materials moving higher because the dollar is getting weaker. And what does that mean? That's inflationary. They don't want to talk about that. They'll ignore inflation until it's too late. And once that genie's out of the bottle, you're going to see stocks decline, precious metals move higher. You'll want to be short the market and long of commodities, and that's the way we're currently positioned.
Okay. Excellent. Well, I really appreciate you kind of giving us a little insight into the actual physical strategy that you guys are kind of trying to implement at the contrariantrader.com. So I really appreciate it. So it's a nice kind of change to the interviews that I thought is working out well. But let's talk a little bit more about the Contrarian Trader. Sure. You have a couple different plans on there. And it really looks like there are a lot of different features that could be useful, obviously, to someone who's just getting kind of into the education, but also as somebody more intermediate and advanced as well, because there's some interactive parts, and I'll just list a couple of them. You have some real-time trade alerts, trading lessons, watch lists, market wrap, the market pulse check, focused stock analysis, and then some webinars. Those are for the silver plan. And then for your other plan, you have everything else that was included in the previous one, as well as some stock chart requests and some second opinion. So do you think you could just kind of give us a little bit of a brief explanation about kind of what some of those features entail and a little bit of maybe which ones are the most popular?
Yeah, the gold plan is really picked up quite a bit, and I'll start off with the basics. And the basics, I believe, is that we're always learning. I learn a new thing every day, and so what I do with Market Wrap, I go over the day's events, and I do it. I put the charts up that I'm watching,
Okay.
and I point out to people what divergences I might be seeing or what bases I may be seeing. When do I plan to execute a trade? And when is the best time to exit a trade? We need to draw our lines in the sand, put our nickels down, and say either A, I'm going to stop out early, or B, get long, or whatever the trade may be. But I like to have people educated before the market opens, because if they do their analysis while the market is open, it drives emotion. That's why I don't have a chat room.
Okay.
I don't want people trading off of emotion. I want them to have rational, sound rational sound theory for why they were going to make the trade, and that way they can have conviction, confidence, and stick with it, and use that rules-based approach I discussed. On the weekend, I have the week ahead commentary, and that's where we do a review on a weekly basis. So the market wrap, which I send out intra-week, that's on a daily basis. How are the markets behaving short term?
Okay.
The week ahead commentary is more longer term. We want to take a look at the weekly charts. How do we close out last week, and how does that price performance fit in with the bigger picture? Is our uptrend still intact? Did we break down below a support level? If so, what's our strategy moving into the next trading week? What stocks are we looking at to either buy or short? And what positions may we book profits on, or may we need to take a loss on a position and keep our losses small? So I do a lot of analysis, and I show our members on video exactly what I'm looking at, and they learn from the review that I do.
Okay. Very interesting. I mean, it seems like a very, intelligent way to go about it, basically. That is a good way, I think, to kind of get rid of all of the emotion that's involved with obviously investing your own money. To be able to do that kind of during the weekends when the markets are closed, that sort of analysis at that point is obviously going to be much more logical than it is going to be at a certain point when you're looking at those certain things, and you see that the stock that you already bought in just dropped, 5%, and you're starting to sweat, wondering if it's the time where you should drop. But it seems to be much more intelligent, obviously, and much, like I said, logical to be able to kind of come up with a pre-plan before the market really opens and get an idea of kind of where you think things are going when you don't have the emotions knocking at the door at the same time. So
Correct. If you're able to out of your trade,
I think we're having some technical issues. Do you think you could just start over? I think we may be having some problems with the connection. Well, hopefully Bob will come back in a couple minutes. And are you there, Bob?
Yep, I'm here.
Awesome. Do you think you could restart with that answer again? It looks like we're kind of having some connection issues, but I think that you came back.
Okay, yeah. What I was saying was that if we're able to take the emotion out of the trade equation, the individual, that individual trader, no matter what their experience level is, becomes a very powerful force. Because if you use that rules-based approach, meaning on the charts, you're looking at support, resistance levels, and you don't ignore them. You respect them. Mm-hmm. You become a very, very effective trader. And the key is, obviously with emotion, is you need to be so steadfast in cutting those losses early. Be honest with yourself, and you could do a really nice job and make consistent profits.
Excellent. What kind of traders do you typically take at the contrariantrader.com? Do you take all levels? You take beginner, intermediate, advanced?
I have a lot of fun with the new traders. I mean, they'll ask me the basics of what's a good online broker to use, and I love them. I've had Traders start with me, ask me those basic questions. Now they're bringing me, years later, they're bringing me trade ideas, and they're looking to see whether or not they can get a rise out of me. Will I talk about it that night? And I think that's great. Or I'll exit a trade early, and I may have not made as much as other people because I don't always look to get out at the top.
Yeah.
Whereas they made more money than I do, and they send me an email sending me saying I made more money than you did on this trade. That's great.
That's a good
So
student.
I enjoy that. I get a lot of satisfaction out of that. And I do have experienced traders. I have a couple of professional traders as well.
Oh, wow.
What they'll use the gold level. They want a lot more engagement. I'm more of a boutique firm. I don't have 1,000 members, nor do I plan on having that. What I want to do is I want to build more of a niche of dedicated traders that I can engage with. I can teach on either a one-to-one basis or as today is Wednesday. This evening I will be doing our member stock chart request. Our gold members will put their symbol on our ticker cloud. I review their symbol on video. There aren't many services out there that will do that for their members. So it really doesn't lend itself, the business model, to having thousands of members, several hundred members, sure, but not thousands of members. And I don't want it that way. I just enjoy doing what I'm doing.
I think that makes sense. You know, you can apply a much more personalized kind of personalized service, obviously, if you have lesser numbers of people, lesser numbers of students, and you know, through that also you be able to help each other in a certain way. You know, if you have way too many students, then you almost get a little bit overwhelmed as well. But when you actually have that ability to kind of go to each individual student, they actually may end up teaching you a couple things as well. You know, they have to ask you some certain in-depth questions which you may have never have to ask yourself before, or something along those lines. So I think that makes a lot of sense.
Absolutely, yeah.
So there's a couple different things that I saw on your website. First of all, it's more for, I guess, people that are kind of looking to get into the contrariantrader.com, maybe trying to get a better idea of what your strategy is. Can you tell us a little bit about how you get the 14-day free trial, and then also I think there's 2 free video lessons. I mean, I was just looking at your website, and I think that that's obviously a great tool for beginners to use, or even obviously intermediate or advanced students that are looking to just kind of get a basic idea of what you offer.
Yeah, I put together the video lessons, and that's going to be going up from 2 to 7 at some point in time in the future. I'm working on them now. What I want people to get is a flavor for the type of trading that I do. And I want them to learn not just the charts, but to ask questions. Again, going back to analyst upgrades, why are they giving me this free advice? Ask questions. Be cynical of what information is being put to you, because again, psychology is key for the banks, because this is a war. It is the small money, or as they like to call us. I'm not a fund manager, so they still consider me dumb money.
Yeah.
You know, they want me to get me excited going and buying stocks on an upgrade, and that's what they call us. And if the street is calling us dumb money, that means they have no respect for us. So I want to do a top-down approach of how I educate traders. Learn the game. Learn the charts, and then you'll build your confidence. I engage with you, validate that you understand exactly what I'm saying before you execute a trade. That's what I provide on Second Opinion. So the free videos gives you a taste of what I do. I also send out best stock charts each week, and that goes out to my mailing list and social media. And could just go to the Join Now button and just sign up for the 14-day free trial offer. Cancel. There's a cancel button in the back end. You can always cancel at any time.
Awesome. Thank you, Bob. I mean, I think that was a great explanation. You know, it's you really kind of gave us a little bit of an idea of what kind of strategy you're trying to implement at the contrariantrader.com. I think that is going to be all the time that we have for today.
Right.
Is there anything else that you wanted to add about some of the features that you have, or anything else that may have popped into your mind during the interview?
Yeah, I think that, you know, there are a lot of large competitors out there,
Mm-hmm.
and a lot of my members have already been with those large competitors, and they didn't get the personalized service. And I think that a lot of people, they tend to gravitate towards chat rooms. I think respectfully to my competitors, some of them are very good,
Yeah.
but some of them just sell a chat room. And that type of trading on impulse, or trading because another chat room member says to buy a stock, very, very dangerous stuff. And I would caution against it. And I offer a personalized service. I set it up this way so I can help the individual. So please engage me. Robert at the Contrarian Trader is my email. If you have questions, I want to make sure that you're making the right decision for yourself. That's why there's a 14-day free trial offer. And many of my competitors, they bill on a quarterly basis, and there's no refund, and there's no 14-day free trial offer. So please check us out. We welcome questions. Challenge me on my opinions. I welcome it. And I look forward to talking to you. And I appreciate your time.
No, of course. No, I think that you bring up a really good point. You know, it's, of course, everybody wants to make money, and going into the chat rooms, you can actually physically see how some of these successful traders, where they're entering, where they're exiting, how they're profiting. But the real question is do you want to learn how to make money, or do you want to just go ahead and make money directly? And yes, of course, you can make money going into one of these live sites, you know, for a couple days, couple weeks, watching how they trade. But eventually, once you leave, once you stop paying that subscription and you try to recreate or reproduce those same sort of trades, you're not going to have any idea of where the actual strategy goes into choosing those stocks, and when the actual knowledge of when to enter and exit comes actually into play. So I think that was a great point that you brought up.
Thank you. Yeah, and I think that's where second opinion, my gold level feature comes in, where if you're a trader that you've been with me for several months, you're feeling confident, you want to bounce a trade off me. Listen, Bob, I'm looking to trade GLD. I want to short GLD, and I'll give you my feedback on it. Would I take on this position, or would I take the opposite end of that position? And that type of feedback is hard to come by. And the problem with most traders is that they trade in a silo. They don't have people to bounce questions off of that'll give them really objective opinions. And that's what I try to produce for my customers, my members.
Well, I think it's a great service that you're offering now, Robert. I mean, I think that it's really the personalization aspect is definitely something that I think a lot of especially beginning traders and intermediate traders need to find in order to get that solid base if they really want to learn how to actually trade. So I think it's a great service you're offering. I recommend that our viewers go check out the contrarian.tv. Maybe check out the 2 free videos, or the 2 weeks free trial. Unfortunately, that is all the time that we have for today, Bob. But I just wanted to thank you for coming on Trader TV, and I hope that maybe we can see a couple recommendations, or maybe see a couple live shows on Trader TV at some point. But
that'd be great. And then thanks for having me, Robert.
Of course, thank you very much. Have a nice day, Robert.
You as well. Take care now.
Thank you very much for joining us here on Trader TV. That was Robert Desmond, CEO of the contrarian.tv. I highly recommend that you go check out his site. It's really well set up. I mean, I was checking it out today, and there's a couple different free offers that we were talking about. But anyway, thank you very much for joining us. I wish you the best of luck with your trades and your education as well. Thank you, and have a nice day.